Too often business owners today are focusing on the little things in business. They're ordering supplies, dealing with employees, and dealing with customers, when what we should be focusing on is the most important thing, cash flow. I've grown over 10 businesses from the ground up. In this podcast, you'll learn the ins and outs of building a business and how to build transferable value. And most importantly, you'll learn how to maximize cash. They call me Cashflow Mike, and this is the clear path to cash. Hey, it's Cashflow Mike, and I tell you what, I'm actually in Texas. This is the first full day that I've had power, and guess how I'm spending my power? With Bill Prater. Yep, Bill Prater of Business Mastery, and they have a model called Scaleology. And what I want to do is talk to Bill today about his model, his way of doing business, and believe it or not, I just like this guy. Bill, welcome to the show.
Hey, great to be here, Mike. Thanks for that enthusiastic, over-the-top introduction. I liked it.
Hey, you got to keep somebody excited, right? You got to keep people excited. And you're listening to the Clear Path to Cash podcast. And we're found on Apple, on Google, on Spotify, you name it. We can be found there. Make sure you subscribe, get notified of new episodes, because I'm telling you, it probably won't get better than this. Bill and I are going to talk to you today about simplifying financial concepts. That's what we're talking about, simplifying financial concepts. So, Bill, kind of introduce everybody. Why should we know you?
Well, I've been there, done that, and failed many times. And you and I both know that failure is sometimes the fastest path to learning. That's right. So that's kind of the main reason.
That's right. Like when mom told you not to touch a stove.
Right. Exactly right. In fact, we're going to talk, we're going to sort of interleave this concept of making mistakes and failing as we start zeroing in on how to simplify the financial management of your business.
Well, that's really interesting because, one of the concepts that Rob Chandler and I that's one of our core principles is fail fast. Have you heard that before? Or what do you think of that?
Yes. I'm a huge subscriber to that. And if we have time, I'll tell you about modern submarines and the way they operate versus the ones back in the Second World War, for example. But yes, it's much better to execute right now and fail than it is to sit in the corner and plan and do nothing.
Well, that's true. That's true. So, all right. So you are practicing a model called Scaleology, right? And I see it everywhere. You guys are doing a fantastic job, actually getting the word out about Scaleology. So explain to us what that is.
So generally speaking, Mike, if you look at any distribution curve of, for example, an industry or a niche within an industry, that bell curve has in the 80, let's call it 80%. That's in the middle. That's where all the average companies reside. And we'll get into this, I know, knowing you, that it is actually a fool's game to pay attention to things called industry averages and standards and norms, because that's where the mediocre people are. So Scaleology focuses in on the right side of that bell curve, where the elites, super players in your industry are. Those people are scaling, i.e. revenue, bottom line cash flow. By the way, cash flow is much more valuable than profits, and their business value. And so Scaleology model was built many years ago by me emulating the best practices of the elite players, those that were preeminent, those that were mastering their market, that were shooting it out of the park. And those people exist, Mike, as you know, in every single industry, in every single niche. There are the superstar players, the companies and the owners that have those kinds of businesses. And the Scaleology model allows people to rapidly emulate the behavior of the business owners of those kinds of companies and do the same sort of thing for their own company.
Yeah, see, that's exactly what I'm talking about, is being able to operate on that, that inset, out with the elites. When I use industry average, and maybe you do the same thing, I don't know if you do or not, but when I use industry average, I call them the C plus players, right? That's what they are. They're C plus. If you want to be C plus, just be average. But what I use industry average is to get you a baseline of what you should be. If you're not there, at least let's get you to there. And then we can talk about becoming an elite, becoming an improvement expert. And the ways we do that, I think, are very similar. In the conversations we've had kind of offline here, we really match well in being able to take a complex financial concept and bring it to the average person, right? So I can put a ratio into action, right? Can you give us an example of maybe how you've been doing that?
Well, first off, you and I are absolutely in sync about industry standards. It's not to ignore them. In fact, you should know them cold. I'd like to just have people think about, and maybe some of our listeners have been there, doing it live. But if you think about a complex dashboard that exists inside of a large aircraft, think of a 737 or plane like that. You go into you go in there and you think, how in the world can these people sitting in the pilot seat, in the co-pilot seat, get us any place at all with all that data and all that input? Well, that's exactly what business owners have if they allow themselves to be influenced by those things. So envision these instruments not just being passively, but barking at you. You think about the alert. You got an alert. Ring, bang, crash, fireworks, and so forth. They're all distractions. But if you go into this cockpit, you'll notice a lot of peace and tranquility and calmness. And those instruments are all there, but instead, in front of them, they have what's called a pop-up dashboard. It's a hologram that shows the most vital.
Yeah.
The most vital. And that's it. So the first step following on the road, Mike, that you just teed up, that I teach people is you've got to spend time looking at your business and figure out what the vital drivers are. The good news is I've never seen a business that couldn't be operated, managed at a high level, needing more than one sheet of paper. That's it.
Hey, that's exactly right. And I'll tell you what, here's the cool thing is that we all start out with the same three sheets, right? You got the income statement, the balance sheet, the cash flow statement. We all start off on the same sheet of music. And what was cool is, do you remember how you explained the balance sheet to me just last week? Could you bring that out again?
So, okay. So what was more than the balance sheet? I guess that was, I didn't do the income statement, but I did the balance sheet. So not that the word dummy doesn't mean that somebody doesn't have knowledge. It's just a philosophy of looking at something. So if you can look at something and through the eyes of somebody that doesn't know that space, how can you articulate it in a way that's easy for people to understand? So if you think about balance sheet, you've got on one side it says assets, and then it has two or three categories. Assets. On the other side, it says liabilities, and at the bottom it says net, or what's it called? Not net worth. What's it called? The last one. Equity. All right. There's a variety. So what I thought and Mike talked about is if you're communicating with your team, particularly the non-financial people, that side of the left side of the balance sheet, that's if you're looking at it, it's things and stuff. It's things and stuff. That's the right label. Forget the word asset. Right. Nobody would misunderstand what you meant when you said things and stuff. Because if you say, when I say things and stuff in our business, what is that? Oh, the furniture and the computers and the cash. And they'll give you all that stuff because it's just clear. Now, right. If you go to the other side, go look at the right side when you're looking at at this piece of paper, at the stuff at the top, it's things you owe. things you owe. You ask anybody, what does that mean? They say, well, like my credit card balance or my etc. And in your case, it might be accounts payables and stuff like that. Maybe credit card balances too.
Yeah.
Things you owe. And then finally, equity. Out with that. It's what you own. It's what's left.
See, and you make that so simple, right? So you didn't tell me about the income statement though. So let's keep going.
So, so the income statement. So the income statement is really a complex thing. If you look at it and you try to figure out what in the world's on here, it's not very complicated. So what it is, the income statement at the top, a lot of people think it says sales. It doesn't say sales. It says revenue. There's a big difference between sales and revenue. You can sell a lot, but if you don't collect any of it, you're not going to have any revenue. So just think that the top stuff is at the top of your income statement. That's the stuff that's coming your way. So it's coming in the front door. You can give it any label you want. Revenue is a good one. Then what does it cost you to get the revenue? Well, first it costs you got to pay for sales or marketing, whatever. So things like advertising and marketing and promotion and commissions and so forth and so on. That's the cost of the sales. After that's done, you got your net sales. I'm actually using fairly close to, not quite GAAP, but close. But it's the net after you pay the cost that it took you to get that. After that, most of us have to buy something and then reposition it and then use it as our product. That's called the cost of the goods that we sold, or cost, some people say COGS or cost of goods sold, but it's really, what is the cost for me to make what we are going to sell to people?
Right.
And after that is done, you have left what's called your gross profit or a gross margin, etc. What's left? Everything else. Yeah. So everything else. So that's the rent. That's any kind of salaries and so forth that you have for people that are not involved in selling and producing. They're keeping track of stuff. They're hiring and firing people, etc. So all of that comes out. What's net is your net cash flow. Where does that go? Well, that's what ends up going into your things you own, called retained earnings. And so they go together. They're not separate documents.
Right. You know what's funny is that I've had some people actually challenge me on this statement. I don't know if you will or not. We haven't talked about it.
We'll find out.
I make the bold statement that gross profit is the most important number on the income statement because it's the only place you can get cash to pay your bills and to put in your pocket. What do you think of that?
All right. So I talked about the pop-up dashboard. Mm-hmm. And the pop-up dashboard means what's the most vital. And so when you look at this income statement, very few people would say the most vital is how much I'm paying for pens and papers and staples. That would be an odd thing for somebody to claim is the most vital. Yeah. But in general, although each of these vital driver dashboards, these one piece of papers I'm talking about, that when I work with people, they have a variety of things on them because they change niche to niche. But the one thing that does not change is gross profit or gross margin. Because as Mike just told you, that's your first chance to have really real money on your hands. So for example, some people think I'm outrageous when I might say something like, what should you pay a sales rep? And I'll say, well, how much is the lifetime value of your customer? They might say, well, my lifetime value customer is $100,000. Okay, good. Well, in the first sale, how much do the people usually buy? I say, they might say, well, that's usually around $1,500. I say, what's your commission? Oh, we pay generous. We pay 20%. And I say, no, I wouldn't do that. I'd pay 100% commission. What? It's outrageous. I said, no. First off, the sales rep, she'll be so pumped up to realize that when she sells something, she gets 100% of the gross profit. You say, yeah, that's what she gets. She's going to sell her beat her her head against the wall to get people to say yes to that. Then you've got the other $90,000. I think that's my example. 10,000 in the first sale, 90,000 more, and she's not getting paid for that. Who's making that happen? Generally customer service people and production people and engineers and so forth. So, but people get so hung up on this stuff. Gross profit is so vital. You need to devote a lot of energy to get there. So, on a vital driver dashboard, you don't even actually have to have revenue. You may need sales on a vital driver dashboard, although sales is not a financial item. It is an important item for you to keep track of, but gross margin's a must, or gross profit.
Well, you know what's funny is the people that challenge me, they'll say things like, well, no, all I got to do is sell, the shelving unit. I got to just sell this piece of equipment. I can get more cash. Well, to me, the only reason you buy that stuff is to generate more revenue. So if I sell my assets, I'm actually hurting my ability to generate revenue. So it didn't make sense to me. The only that gross profit is so important. Now you mentioned another term in there that I don't know that most people know. It's lifetime value, right? And a lot of people probably don't calculate that out. They just know what the sale today is, maybe not what it is over the value of the life. Now I've been in software sales now for 8-9 years, and here's how we calculate it. Right, we take the value on subscription sales. We'll say if you are buying something for $100 a month, we multiply that by the churn rate, which is how many people actually unsubscribe, on a regular basis. And we'll say if that's 20%, we take $100 times 20%, and that becomes, divided by, got wrong, divided by gives us the actual value. So it should be a higher number. So here's where I made a mistake. Listeners, don't beat me up online. If you want to know a number that's larger, you divide. If you want to know a number that's smaller, you multiply. I mixed them up. Sorry.
You did mix them up, but you never put yourself out as being a CPA.
Yeah, that's right. That's right.
Well, so Mike, yeah. So you just mentioned a concept called lifetime value, or I did it, and you dug into it a bit. So I want to have people to give them a kind of a verbal image of what the dashboard could look like. When I say could, it'll change a bit depending on the niche you're in, but you're not going to find lifetime value in your financial statements. It doesn't exist there. Mike gave you the way, and if you're a SaaS company, software as a service, the way you would compute it. Now, but the dashboard usually is divided up in some sort of like this. Category 1, 3 or 4 items would be financials or physicals. I use physicals. I like it better, a little more cute word. Gross margin is one of those. Maybe another one would be a receivables balance or net cash flow. Those are 3 potentials. But something like lifetime customer value is in another category. Physicals, I like to go this way. Physicals, productivity, quality, and business development. Now, quality would be a nice place to have a lifetime customer value, because the larger that number and the greater the length of time would indicate that your customers like you. If your customer lifetime value is little and people stick around for a short time, it's a quality indication that they don't like you. So things like returns would be a good candidate for quality. Things like customer complaints are good candidates for those categories. So the vital driver dashboard includes financials, productivity, quality, and business development items in most instances.
Yeah, right on. Hey, you are listening to the Clear Path to Cash podcast, and I'm with Bill Prater of Business Mastery, and we are in one heck of a conversation about the simplification of financials. So what I want to dig into with him now is I want to go to maybe are there some tricks, tips, techniques that you use to be able to have a conversation? Like I use one that I call the Shane technique, right?
Okay.
And I call it the Shane technique because my best friend's name is Shane. He runs his own little painting contracting company. And when I try to tell other people about financial concepts, I run it past him first, right? Because he doesn't have the financial sophistication, no formal education in it. And if I can explain it to him and he gets it and he can understand it and put it to use, then I think it's ready for other people. I mean, and I'll give you an example of that, like current ratio. And I think I've told you this before, but like with the current ratio, most people don't get it. They don't understand it. They don't know what it means. But so I give them an example. The actual formula is your current assets divided by current liabilities. So I say, okay, here's an example, Shane. Current asset could be your checking account, right? A current liability could be your credit card. So you got your checking account and your credit card. Let's say you divide the balance between those two, and it comes out to be 2. Here's what that tells you. For every dollar you owe on the credit card, you got $2 in the bank. Are you okay? And he can understand it, right? All of a sudden, I just show him how the actual number relates to something that's happening inside his business. And there's an action. If I need that number to be higher because the bank told me to, well, I know I either got to put more money in checking or I got to have less money on the credit card balance. So are there some things like that that you use?
I do. I come at it from a slightly different way, and uh, you and I happen to know financials and balance sheets and so forth pretty well. I own an investment banking firm for 22 years, so we know it pretty well. The tool I use, it comes at it from a slightly different way, is I use a tool which I've coined called Pareto to the third power. Pareto
Yeah.
to the third power.
Yeah.
A guy named Joseph Juran took Pareto's original concepts and created what many of us know as the 80-20 principle, which means simply that 20% of our inputs produce 80% of our outputs. Now, the trick is for us to figure out what those 20% are. It isn't just any 20% produces 80% of the output, a certain 20% produces that. So Mike touched on this concept of the current ratio. So if you run that through the Pareto principle, you would find that you're in much better shape if you think about this 2-to-1 ratio than you think about a 0.75-to-1 ratio. And so if that's the case, if you're in that kind of posture, then I say to people, you've identified something that's a weakness. So that might be something that belongs in the vital driver dashboard for a certain period of time, maybe hopefully temporarily. So it's going to say current ratio. Now, we don't need to know the definition. We don't need to know anything. We just need to see on this dashboard, is it green or red? Yeah. Green or red. If it's green, we're at that 2-to-1 or higher ratio that Mike just told us about. And if it's red, we're in trouble. We need to do something. We need to reduce our liabilities or get some more loot in the door. One or the other. It's binary. So that's a great example of, first, how does the vital driver dashboard get built? It gets built by the Pareto to the third power. What does that mean? 80-20 can be, once you've got that sorted out, we do it one more time. So 80-20 on the result. So quickly, anybody, what is 20% of 20? The answer is 4. So 4% produces 80% of 80%. So what's 80%? 8 times 8. It happens to be 64. Yeah. What that tells us is, in your business, 4% of the stuff produces 64% of the output. I would, if I were you, pay attention to that 4%. But we'll even do it one more time. We'll do it Pareto to the third power, or 80-20, third power. We got 4. Yeah. What's 20% of 4? 4%. What's 20? So if you do the math, it comes out to 0.8, but that's for financial people. For Mike and I, it's 1. We can deal with 1, not a fraction of something. Okay. That means that 1% of your stuff in your business produces 80% of the 64% we just got down to. 80% of 64 is 51. Let's call it 50.
Yeah.
What that tells us is 1% of your stuff produces 50% of your outcome. Ladies and gentlemen, listening to Mike and I right now, your goal, figure out those 1%, and that's what goes on the Vital Driver dashboard.
Dude, that is fantastic. I'm going to jump on that, and I might put you on the spot. You showed me, and maybe you can hold it up, a tool that you have. It's almost like a slider that actually helps people better understand, maybe not that concept, but another one. I'm just talking about how you simplified the world. Do you remember that? There's a slider.
Yeah. So yes, I do remember, and I can reach it.
And I put you on the spot, but I'm going, oh my God, these are the things, if you're listening to the show right now, these are the things. I mean, that Pareto principle or Pareto power to the 3, is that what you said? Or to the third power?
So just think of the superscript. So Pareto squared, Pareto to the third power.
Okay. Pareto
to Pareto with a 3 up there.
You get things like that where, I mean, he's telling you to focus, on that 1% to get the biggest bang. There's a 51% impact in your business just by really focusing on that 1% driver, those prime contributing factors that I'm always talking about. He's actually put a mathematical equation to it, and I love it.
Well, and back to the gross margin. Mike verbalized it, and you can believe Mike or not, but if you actually go through the Pareto to the third power, you're going to find the gross margin is one of those 1%ers.
Yeah.
There you go. That's how it works. So what Mike's talking.
Now I can prove it with math.
Yeah, exactly. So Mike's a software guru. What he's able to do is take all kinds of not just financial, all kinds of concepts, all kinds of data, and get them into a process, a system that's repeatable. But I'm old school. So back in the day, I created a tool because I can't write software. Mike can, and my son can, but here is, if you will, this is going to be is this the balance sheet? Yeah, here we go. So first off, don't forget about balance sheets. Forget about income statements. You want to worry about cash. That's right. Cash flow, Mike, if you will. So here's an example of one I built. This is I call it a cash statement. See at the top it says cash. Yep. Hopefully you can see it. Yeah. Don't worry about this. Don't worry. You can take a screenshot. You'll have if you want. Mike has a video of this, and it's slidable. You can actually slide this thing and move it around. But what this will tell you, for example, is by looking at, I'm going to turn it over so I can in fact read it. So it would tell you that, for example, that you can take beginning cash, add to it sales, cost of goods sold, and you end up, I'm not going to read the whole thing, but what it shows you is how do you get beginning cash to ending cash by going through this little matrix. I think I had it actually upside down, Mike.
No, you actually had it right. But I'm going to tell you what,
right. Okay.
These are the things that Bill Prater and Business Mastery has at his disposal, right? So if you haven't looked at it, what's your website, Bill?
So the best one to go to is actually the model. So I got the company's Business Mastery. The model is called Scaleology, Scaleology.guru. When you go to Scaleology.guru, if you go over to a section called podcast and you put in Mike Milan, guess what? You're going to find this dude on my podcast. So you should at least do that part. But also when you're on there, there's a variety of free resources and so forth. And so please just go directly to that website and you'll get your hands on a bunch of free tools. You'll understand my philosophies. You'll understand my devotion to helping business owners understand what the elite players do and emulate that. And so you're welcome to go there. Mike, thanks for having me mention that to people.
Yeah, no worries. Hey, I'm impressed. I want other people to be impressed and go take advantage of your stuff as well. Hey, you mentioned something, and I don't know how long it'll take, but I want to hear the submarine story. I think everybody else does. Now, you teased us in the beginning, and right before we end the show, maybe, is there a quick version of it?
Yeah, no, it is a quick version. And so I wasn't there, but I've been told. So back in World War II, a submarine was essentially assembled and built like a rifle. By that I mean that the submarine captain had to continuously maneuver his submarine to line up with his target. So the target, let's call it a freighter filled with supplies for the enemy, would be going in the ocean, and your job is to shoot that a ship with a torpedo. The torpedo went straight as an arrow. And so if you didn't line yourself up properly, you're going to miss the target because the other guy's trying not to get hit. So he's maneuvering all over the place, kind of like our customers and vendors are doing. They're going every place.
That's right.
Today, if you're in the same situation and you're a submarine captain and you're aware of an enemy ship nearby, fire the torpedo.
Yeah, that's right.
Because it doesn't matter where the world the ship is that's around you. Because today you steer the torpedo, not the ship. And so the lesson in that is that all of us have a modern submarine at our disposal. I'm not against planning. I'm in favor of planning, but much more valuable is to launch your new product, and not launch your new advertising campaign, launch your new initiative, start your new project, and once they're underway, then manage them. I've got a kind of a sub tool, Mike, that I call strategic execution team, or SET. And the whole lesson that I teach people is get things moving and manage them strategically with an execution team. And those are three powerful words. Focus on strategy, get involved in execution, and then make corrective action while you're underway. Don't hesitate.
All right, last question, because I got you here. I've got to ask you, if your best friend came to you today, and wanted your advice on starting a business, what would you tell him?
My advice on starting a business is the first thing you want to do is to sit down, take your time, and find out how in the world can I get my hands on the practices, mindset, and team management philosophies of the elite players in the industry.
Nice.
How can you get there? So that's the first one. What you do not want to do is to go get involved in all the vendors and all the suppliers that are supplying things to your niche. Because if you're in their shoes, would you sell your product to the people that are in the elite position who really don't need what you got because they got their own thing figured out? No, they're focused on people like you, if you happen to have an average business, or if you're starting a new business, and avoid those people at all costs. Instead, figure out how to get in front of and listen to the elite players. That's the sub lesson in that is seek out guys like Mike, who have been there, done that. You know, Mike, I think this is your 9th software business, right?
Yeah, it's a 7th product, 13th company. But
there you go. 7th product, 13th company. And Mike has successfully sold those companies. Yeah. So if you want to start, for example, a software company, Mike's the guy you have to seek out because he's an elite player in the industry. I hope that makes sense to our listeners, Mike.
You're awful kind. So you're awful kind. Great advice. And I'll tell you what, Bill, thank you as always. Bill Prater, Business Mastery. Please go to the website, check out his stuff, hire him and his team if you need the help. And man, you will not regret it. This guy can turn your business around like nobody else. Bill, thank you.
You're welcome. Thanks for having me on the show, Mike.
Yes, sir. Hey, I'm Cashflow Mike, And you've been listening to the Clear Path to Cash podcast. As always, check us out YouTube or Spotify or Apple or Google, doesn't matter. And don't be a dumb business owner.